Good morning, everyone, and welcome to today's Morning Coffee with Mike. I've got some interesting stuff for you today, and it's all about when the market does you dirty. I heard about this and saw a little bit of it in a trade that happened in PATH, ticker PATH. And that happened earlier this week. And I want to walk through that trade with you in ticker PATH because so many people were in this particular trade. If you were in this trade in PATH, type it into the chat. Let me know. I'd love to hear it. And as we walk through it together, we'll find some solutions for how you can avoid the market doing you dirty like this. So, started off Path started off with a massive gap up after earnings. This is what it looked like on the daily time frame. Price was up 26.72% on the day. Not sure if you could see that. It's right up there. All right, we've got some people joining from X now. Apparently, X you could go and type in and add comments. So great, do that. Amazing. We're streaming now to Twitter. We're joining Rumble, YouTube, all over the place. Anyhow, back to Path. So Path gapped up massively after earnings. Here's what it looked like on the weekly time frame. You can see that massive weekly bar. On the weekly bar, the chart shows that the move was just getting started. Path had spent a long time, couple of years trying to find a bottom. It eventually rounded out the bottom down here, was trading sideways for a very long period of time, then eventually broke out right after earnings on massive volume. And that volume bar right there was the heaviest volume that it's had in a number of years. It was even heavier than this one back here. So Path pulls back a little bit. And a few days later, it pulls back and it holds the low of the gap. Tests the low of the gap and it holds the low of the gap. Very interesting. Then from there, price starts to tighten up a little bit and things get interesting. So here's how things start to get interesting. I have a 30-minute chart up, and I'll actually zoom in a little bit on here so you can see the price bars a little bit better. Get this side panel out of the way here. So we have a 30-minute bar. And what I'm going to replay this chart one bar at a time so you can see just how the market did a lot of people dirty. So here's the open the next day. Was that the open? No, that's one bar in. Here's the open the next day. So price opens down briefly and then triggers the entry, and a lot of people are very happy at that point because you were getting in at a great price. Path was tightening up. It looked very much like a cup with handle. If we zoom out on this time frame, I don't want to ruin the chart here, but after it had gapped up out of here, if we were looking at this on the longer time horizon, it actually started to look like it was forming a cup with handle on the higher time frame, and even over here too on this 30-minute chart, it has a bit of handle like action developing here. Here's how I was seeing it on that day. I saw this area here as the pivot, and I saw this bar right here, right down here, as where I was going to place my stop loss. So price broke out on here, and here's what happened thereafter. Price is holding back under the pivot. And by the way, if you're in this or you were in this, just type into the chat, let us know, and let us know when you got in and if you experienced this as well. Because here's what happened. So we get towards the end of the day. Here's the last bar of the day, and price is just underneath that pivot area. It's not too bad, right? Sometimes that happens. Sometimes price will break out and then squat. Here's another thing that some people might have bought in on. Some people might have bought in down here when price was rebounding off the 10 EMA. Let me know if you guys did that. Type into the chat. So, anyhow, price rebounds off this level, and there's a potential entry right here. Let me zoom in a little bit. Not sure if you guys could see it very clearly, but right here is a potential entry point. Then, here's what happens the next day. Bam. So, if you had your stop loss right here, you were shaken out. If you had your stop loss right below the low of the day, you're stopped out. If you bought in down here and you raised your stop to break even down here, you were shaken out. So everybody is shaken out at this point, except for the people that bought it way down here, or if you had a very wide stop. And by wide stop, here's what I mean. So let's say that you bought here and you didn't raise your stop. Well, price dropped 7% from that level. From the peak of where it was, that would have generated 9% drop for you. So then the question starts to become, well, how do we defend against the market doing a story like that, right? Because price dropped that far, rebounded right away, moved sideways, and then it starts to come back up. And here's where it's at right now. Right? So how do you stop the market from doing you dirty like that? I'll share with you my thoughts and what I do, and I'll share with you why I do what I do, and we'll open up the floor to questions. So here's what I do. When I take a fresh breakout, what I like to do is I like to get my stop to break even as quickly as I can. And I do that for a few different reasons. The first reason is because I view my trades and the distribution of my trades, right? So all the winners, all the losers, here's how I look at those. Right? Just bring the chart over here and do a little bit of artwork for you, right? So we have our distribution of winning trades and losing trades. And I think about this kind of like a tug of war. So if you have a win over here and you have a loss over here, it's about equal, right? You have both sides pulling on the rope and you're not really moving anywhere. So the closer that I could get the losses to this point here, that zero line, the more progress I'm going to be able to make. Here's another thought. If we're in a point in the market where we're keeping our losses small, but let's just say that the market is very choppy and we're racking up a whole mess of these little losses. Well, a whole mess of these little losses could still overpower this one big win, right? It's just like when you have all the little kids on one side and you just have one large kid on the other side playing that tug of war. Hey, you're still going to be even out. That's what this is. So how can you better manage this? The way that I like to better manage this scenario, get trades to break even as quickly as I can. That way, if anything breaks out, comes back in, it's still a break even trade, right? In that scenario, it's almost like it doesn't exist. So this win is still able to do all of the heavy lifting. If I could have a million of these break evens and it won't affect this, right? So Let's get the drawings off. Let's get back to where we were over here. All right. So what I did on this day, price breaks out. It holds the pivot for a half an hour, and then I'm getting my stop to break even right on that. And then right over here on this bar, I'm stopped out at break even. You might say to yourself, don't you need to give yourself a little bit of room on this? Right. And I used to think that way too, until I started to think, well, maybe I could come up with another solution to how to get back in if I'm shaken out of a trade like this, right? That's one thought that I had. Another thought that I had was, what have my best trades done? What have my best trades done? There's only one way to know what your best trades will do, and that is if you're keeping a record of your trades. If you have a trading journal and if you're doing regular post analysis on your trading journal, that's why I keep a spreadsheet. In fact, I'll quickly show you the spreadsheet that I keep. Just popping open the Google Sheet here. Right, so here's the spreadsheet that I keep. There's a lot of things in here. I've got my open trades. I have Zscaler and Datadog right now. I have a whole bunch of different lists in here, and I have my closed trades. And this goes back a number of years. I started the sheet, but the idea with this is that I could go back in time very easily and then see what would happen if I tweaked my trades in X, Y, or Z way. And it's very simple to see what would happen. So, what would happen if my best trades were cut off at, or if my downside was cut off at break even? How many of these winners would I miss? Turns out that I wouldn't miss all that many. What ended up happening is that the losses go practically to zero. In fact, if I'm looking at my most recent trades, and that's something else that I uh, uh, track in this spreadsheet here, it's very important to track all of your stats. But over here, I'm tracking, well, how many wins did I have? How many losses did I have? How many break evens did I have? And I started tracking it in that way over here. Since I made that switch, I haven't had a loss in the past 11 trades. Over here, I'm doing more than 10, but it's going back more than 11, more than 12. If I get everything to break even, then those winners that I have can just move the equity curve along. It's almost like if you're falling off, or if you're mountain climbing, right? Let's use a mountain climbing analogy. If you're climbing up a mountain, you don't want to start falling down the mountain, right? That wouldn't be good. What you want to be able to do is to be able to secure yourself where, if let's say you slip, you're not falling at all. You're just hanging there, and then you can find your footing again and then continue your ascent. That's what we're trying to do with this. Right, so back to the slide deck here. So that's basically it. There's more information that you could get. There's a lot of more information that you could get for free. There's if you go to marawealth.com, we have a free newsletter for you. There's a lot more information like what we were just talking about that gets shared in our weekly newsletter. It goes out every Sunday. We share trade ideas, not just trade ideas for like, well, what happens to be moving. I'm sharing ideas that are of stock setting up. So basically, everything that's in this spreadsheet on a Sunday is getting shared in that free newsletter. So all these stocks here, some of them are up huge on the week so far. 20%, 17%. Well, which ones were those? That is you. That is Fresh, FRSH. Could have seen that one in the weekend newsletter, on the Sunday newsletter. Stoxel, ETF. Take a look at some of these here. Bring this back. Here's Soxel, now up from the pivot area about 30%. And you could get the newsletter for free over at marrowwealth.com. I talk about these concepts, a lot more concepts in my book, The Trading Mind Wheel. The Trading Mind Wheel is available on Amazon. You could get it as a hard copy, you could get it as Kindle, you could get it as Audible as well. And so let's open up the floor for some questions. And let's see what we've got. We've got a bunch of people joining in from Twitter. We've got Octal. Welcome, Octal. Welcome, Rajanish. Eddie. Welcome, welcome. Meantime, while you guys are getting your questions in, I'm going to take a sip of coffee here. All right, let's see. Question about getting shaken out and what happens if you do get shaken out, right? So here's an example of a trade where I got shaken out just the other day. CRM. I bought CRM as it was coming up. It held the pivot area. And then it got tagged at break even on this day. Barely touched break even. And then it started to move up. And now it's up about, looks like about 3% from the original pivot area. You might say to yourself, well, that sucks. And I would say, well, yeah, sometimes it does suck. At first it did, until I realized that there'll be other trades that won't be quite like that, but some trades that will be more like this one. So this was a trade, CWAN, where I had entered right about here. It gaps up, doing well, comes right back in, tags me out at break even. I don't happen to see another way that I would enter back in. I always want to enter on a high quality setup. So if I don't see a high quality setup, I'm not going to re-enter the trade, even though this one was trading above my entry point for a little while. But then what happens? Gaps down to the tune of 7.5%, right? So if we go back and we start to think about our drawing from earlier, where we have some wins over here, and then we have losses. Not only does this particular method have more break-even trades, it prevents the outlier loss. It helps to prevent that as well. And those things help the equity curve move on up, move on higher. So we've got that as well. So I hope that this was a helpful session for you. Make sure that you like and subscribe to the channel. I also saw that the streaming service now is going to allow Instagram to join the party about time. So we'll be getting Instagram on here. But it's great to see that Twitter is now, or I should say X, is now able to join the party too. All that's great. I'll be streaming again on Friday next week, Friday the 22nd, 11:30 a.m. I'll see you guys then. Take care. Much love. Peace out.